Good morning, good morning, good morning. Welcome to Labour Implosion Day. This is the Morning Blast with myself, Ryan, and of course, Michael. Your very candid take on what's going on in markets. Nothing we say is trading or investment advice. Yeah, these are labelled explicit because we can't be bothered to do any editing, really. And we kind of swear like pirates, to be quite frankly with you. Michael, how are you?
Yeah, very good morning to you, Ryan. Good morning, everyone. Not too bad, actually. Not too bad at all.
Not too bad at all. Well, good. Well, in that case, my dear friend, let's crack on. So obviously things are moving markets this morning. We're all connected to the same question, like how much risk should you be pricing in right now? Obviously, Iran has paused his 50-hour Hormuz military operation on Wednesday because he says progress is being made on a deal. But then we've also heard that it's because Saudis have said, hang on, if you're doing that, you can't use our air bases, etc., which are more in a second. Yeah, we've also had reports that the US fired on an Iranian tanker, I believe it was, put that out of commission, which is, I think it was an F-16 or whatever it was, but a jet, using its guns on a boat, that's not something you see every day. Yeah, we've got markets at all-time highs. Yeah, and it's election day in the UK with, am I right in saying this? Is it like 5,000 plus council seats up for grabs today?
It is, yes, 5,000 council seats plus, I believe, 120 odd members of the Scottish Parliament and 96 members of a reconstituted Senate in Wales. So
look at that for the knowledge
going on there.
Anything in Northern Ireland, or are we just forgetting them?
No, they actually don't have elections until I think next year. So no, I'm not just forgetting the Irish. Don't you worry.
Good for that. Well, good to know. Well, that was complete stato knowledge there. I love that. But yeah,
it's just not just a pretty face, mate.
Well, quite.
Well, not that some would say.
Well, no, I disagree. I think you're charming, my dear friend. I think you're charming. Right, so key themes really: markets, Middle East, and politics. Yeah, earnings as well. We've had some good earnings. I think is AMD up 19 or 20% on AI earnings.
Yeah, something ridiculous yesterday. Although ARM Holdings came in a little bit soft yesterday, but there we are. Should we just kick off with geopolitics and the Middle East? Because I think that's probably the best place to start.
Let's do that.
Because obviously we had news yesterday morning, around about 24 hours ago now, actually, via Axios, that the US and Iran reportedly closing in on a one-page memorandum of understanding to bring the war to an end. According to the sources that Axios cited, the US is expecting Iranian responses to the key points of this plan within the next 48 hours. That is 48 hours from midway through yesterday morning. So basically midday-ish tomorrow is kind of that deadline if you're keeping track. Yeah. If this memorandum of understanding were agreed, it would begin a 30-day period of talks on a more detailed pact to provide a durable end to the conflict. And the sources that Axios cited noted that this is apparently the closest that the parties have been to an agreement since the war began, with the MOU being one which involves Iran committing to a moratorium on nuclear enrichment, the US agreeing to lift sanctions and release billions in frozen Iranian funds, and both sides lifting restrictions around transit through the Strait of Hormuz. Now, I'm just going to say this already because I can already imagine some of our listeners going, oh, it's fucking Axios again. They've said we're close umpteen times. Well, I would also just say that Reuters, CNBC, CNN, Wall Street Journal, PBS, Fox, and others, including Bloomberg, all had basically the same story or a variation on it, which suggests that, this is not just Barack Ravid, making things up, which I don't believe he does or has done. This is actually a serious move forwards. And in addition to that, we also had some comments from the proverbial horse's mouth yesterday. President Trump telling journalists that he feels that the US is closing in on a deal with Iran. He also told Fox that he is optimistic about this framework and gave a time frame of 1 week to get things tied up, which I thought was interesting because what's happening in a week? President Trump is going to Beijing to meet President Xi of China.
And guess who's there now? Exactly that.
Yes, and the Iranians are obviously there at this moment in time. So it suggests that Trump is looking to, probably get this wrapped up before he gets on Air Force One and goes to have a big hug with President Xi.
Just one thing again, I think we've got to make some distinctions here because yes, it's quite clear that there's a good chance that some sort of insider trading is going on ahead of these announcements. But, also let's remember that it goes back far further than just the Iranian crisis. Like with the tariff news, we were seeing front running on that news. There are people probably, maybe, I'm throwing in some caveats here to kind of keep me out of jail, and also keep me off of someone's hit list. There are obviously very strong, solid cases to be made for someone having some insider knowledge. Maybe Barron there pumping on Pepperstone. You know, I other brokerages are available. But one thing to note is obviously this Barack Ravid from Axios is getting a lot of flack, saying it's he's just pumping and dumping and all this stuff to try and front run. One thing I will stand up for him, and again like you, I don't believe he is doing something untoward. I think it's just markets are just looking for any excuse, or some market participants are looking for any excuse to kind of just shout things.
I was going to say, sorry, just before you say that, it feels like that classic thing, and I don't really blame any market participant for wanting to do this because it is purely human nature. It feels like that classic thing where nobody wants to admit they're wrong, and if I can blame someone else as opposed to having to hold my hands up, then that's easier for me to do mentally, and I'm going to do it.
Yeah. One thing I will say, so it's the Hormuz letter, which it's some knockoff copycat of the Kobayashi letter, which
I mean, that's terrible as it is.
Well,
I mean, why you do a knockoff of that? I don't know.
It's a clickbait knockoff off a clickbait, shall we say, punditry institution. But they put out a thing saying breaking several whistleblowers say that the Axios coordinated news with market insiders leaking CME order information via phone calls up to 30 minutes before market open and close prints. Now, obviously, Barack has come straight back with that. He's kind of taken a picture of that tweet and said complete and utter bullshit by the Hormuz liar, which I see what he's done there. Hormuz letter.
Quite clever, yeah.
But one thing I will flag, anyone that knows anything about markets, this sentence should be a massive red flag. Was it leaking CME order information via phone calls up to 30 minutes before open and close print, market open and close prints? Now that makes zero sense. I think what they're trying to say, but they obviously have no market knowledge. They're trying to say that they leaked the news. They're trying to say that Axios leaked the news and people put CME orders into the market. That's what they think.
But what they've actually said is that someone leaked order information. It just doesn't make sense.
Yeah, it's basically saying so the orders were already in there, and Axios have then told other people that the orders. It just makes no sense. And again, this is one of those classic moments that I reckon it's every week or so, me and Michael spot something and we raise it on here where someone's mask is slit and they've kind of betrayed the fact that they know fuck all about how markets operate. Now, Hormuz letter has done exactly that, in my opinion. But anyway, like we said, let's try and get back onto the topic of kind of what's going on.
I did just want to make one broader point on the Middle East just before we get onto markets, because I know we need to talk about that because this is a markets podcast. I said this to our guys internally yesterday. Just bear in mind that if we are at the stage where we are actually realistically getting properly close to a deal being done, which it seems like we are, or we're very close to getting to that point, exactly, with all the usual caveats that could change. What is going to need to happen is that both the US and Iran, whether it be Trump, whether it be Galabaf, whether it be the supreme leader, the IRGC, whoever, they are going to need to be able to sell and to persuade their domestic audience that they have got a good deal. And they are going to have to start rolling the pitch for that, probably about now, in order to frame this as, we won, we've got some concessions from the other side, this is a great deal for us, and not, we rolled over and waved the right flag and surrendered. So there's every chance that we could see a continuation of some relatively punchy rhetoric from all the sides that are involved in this, which is aimed purely at domestic consumption.
Well, exactly that.
And is not, changing the grand scheme of things or the direction of travel at all.
Yeah.
It's simply so that, you can turn on the equivalent of the 10 o'clock news in Tehran and, the people in Iran will hopefully, the leaders will say, they hopefully believe that we haven't just rolled over and that, actually the US has been defeated or whatever spin they want to put on it. So, any comments that we get of that ilk from, all of the key players in this, just view it through the lens of they're trying to persuade their domestic audience as opposed to anything that's going on with negotiations.
And do you know what? I would be hard pushed, and that's a fantastic point, and that we've seen that countless times on countless subjects, right? And you'd be hard pushed to find two nations that do this more, or two administrations that do this more than the Trump administration and whoever is currently in power in Iran. They have domestic language and they have what's actually being said. And again, just remember that, again, we mentioned it yesterday, US coming into midterms. I think, what is it? If you kind of filled if you filled your gas tank up in the US in February and you did it again today, you're paying about 52% more or something stupid like that. So again, Trump doesn't want to walk away saying he's lost, which again is possibly why he also wants to go via Cuba, because that might be an easy win for him as well. They'll remember the last thing they did. But yeah, exactly that. There's a lot going on. Things are moving though, and it has been risk on the back of it. Which
Mm.
takes us nicely into markets. So, but let's be mindful, we're one tweet away from a risk off move. We always are.
Well, of
Um,
course, yeah.
Rally, you could argue entirely driven by ceasefire narrative. I do think, positive earnings and that have coming, although as well. So, I'm just saying, just caveating, before you jump on me. Oi, oi. But yeah,
Oh.
it's been a good week to be long risk, basically.
Very. I would actually say, and I'm glad you raised that point. I mean, clearly optimism around the geopolitical situation has driven a huge chunk of those gains.
However,
And it was, the catalyst for us to turn around at the end of March and the start of April to
yeah,
actually begin this leg higher in the first place. Well, what I would say, though, is that, along with that, we've seen everyone getting all excited again around the AI trade, at least on the semiconductor front, not necessarily on the software front, but that's a story for another time. And we've had really, really strong earnings growth coming through. The S&P is on track for a sixth straight quarter of double-digit earnings growth. Revenues are growing at their fastest pace in about 5 years. And I think, I would argue that yesterday it became more of a geopolitical story. And the reason I say that is because the S&P 500 had recovered all of its war-related losses towards the middle of last month and has basically printed a record high, 2 or 3 times a week since then. It was only yesterday that the equal weight S&P got back to a record high
yeah.
and recovered all of its losses since conflict broke out in the Middle East. So when you consider the composition of the S&P and, the top 10 names in the index, if not the top 20, the vast majority of them are tech-related or tech-adjacent in some way. Actually, it's probably only in the last week or so that this has become a rally that's been more driven by the geopolitical side of things. At least that's how I would look at things. But the other thing I would say on this, and I put this out on Twitter this morning, and just from chatting to market participants, clients, as you do, there are still, it feels, and this is purely anecdotal for what it's worth, but it still feels like there's a hell of a lot of people out there that don't believe in the rally that we've seen, despite the fact that the S&P has gone from,
Mate,
6 to 74 or whatever it is.
mentioning no names, but I saw someone yesterday with a straight face call it a bear market rally.
What?
I mean, we're at all-time highs. We're hitting all-time highs. Like we're ringing that bell every day. But
Oh.
yeah, if you want to still hold on to the fact that this is a bear market rally, then good for you. But tell me you're not doing your ass. Sorry, tell me you're doing your ass without telling me you're doing your ass.
But I do think that's quite telling because, at some point, there's always going to be people. I mean, there's people out there who are saying we're still in a bear market rally from 2008, I would imagine. But there's always going to be those folk out there that are serious players, the ones who are actually running proper money. If you're an investment manager and, you're now, mid-May, you are, the S&P has been at a record high for the last month or so. It gets to a point where you have little choice but to hold your nose and buy back in, because otherwise you are just going to materially underperform your benchmark for goodness only knows how long. And, if you're running money and you underperform your benchmark for too long, you're not going to be running that money for much longer. We don't need to explain that. So, I think there are clearly risks. We could get a post from Trump saying that the whole thing's, unwound and fallen apart potentially. Even if Hormuz opened fully today, then there is still inflation pressures coming down the pipe and growth headwinds coming down the pipe. And as you say, that won't happen. But for the time being, at least, I think, if you try and frame it as, and Mark Bays, our good friend, said this to me this morning, if you try and frame it as a pain trade, I think the pain trade is higher.
Yeah, no, absolutely. Again, and that's something we've said before, and I know it's a cliche, but markets don't need good news to go higher. As bonkers as that sounds, but in this day and age with passive flows and whatever, markets do not need good news to go higher. They need bad news to go lower, and they need escalating bad news and more of it to continue to go lower. And it's something that we've said many, many times, and we get laughed at for saying it, but proof's in the pudding.
Yes.
And there you go. This is why I was talking to Daniela on a podcast I did yesterday with Capital.com. Obviously, other brokers are available. And as I said to them, as I said to her, like, full disclosure, no one else is going to talk your own books. You might as well talk it for yourself. I've been long. Well, I am always long, as many people will know. But even I was taking some off this week after the last couple of days. Not because I don't think it's going to go higher, but, why shouldn't I take some risk off? I've done very well and I want to just kind of bank some of that. And, and because we are at the mercy of a couple of tweets. Now, that doesn't mean I think it's going to be sold off. And there's a huge difference between, taking some profit and thinking things are going lower. But no, it's an interesting one. And again, there's a lot going on pretty much everywhere. If it wasn't for we were saying this a long time ago when this kind of was all like really kicking off a few weeks ago. If it wasn't for the Middle East kicking off, we'd still have a shit ton to be talking about and a shit ton driving markets.
Oh, absolutely. It's just the fact that a lot of those catalysts are going under the radar. I mean, if you think about we have, blended earnings growth in the S&P, and I know the hyperscalers have propped up a lot of this, but it's running at 20 odd percent
Yeah.
or whatever it is year on year. If you were in an environment where at the start of the year you told me we come through Q1 reporting season, we'll have 20% blended earnings growth in the S&P, and you won't have talked about it.
Exactly.
Because the Middle East has taken up so much of everyone's bandwidth, it's almost as if these stories that are underpinning the market have actually been forgotten about a little bit. Added to which, and I don't want to slag anyone off too much here, but it's a lazy excuse to just go optimistic headlines on the conflict, stocks are up.
Yeah.
And I think, too many people are almost just reaching for that excuse. And to be honest, I've probably written a few notes in the morning, hungover, and done it myself, if I'm being honest. But there is actually a lot more going on.
Yeah.
And I think that's starting to factor into it. But anyway, we should probably move on.
Exactly that. Well, look, we're struggling here, right? We try and do a show about topics other than the Middle East, but we have to talk about the Middle East.
Exactly.
It's like self-fulfilling prophecy here. But yeah, let's move on from this for a second. Obviously, we are based in the UK, so we have got a slight lean towards what's going on in the UK, and it is local election day. 5,066 seats by accounts at 136 councils. Labour are trying to defend 2,557 seats. Good luck with that. I think Reform are projected to get 1,300 plus seats. Again, in case anyone missed the show yesterday when we did speak about it, our local elections aren't elections for MPs; they're for local councillors and whatnot. Usually, the electorate don't really care about these elections, and you'll get a very piss poor turnout. But I'm kind of assuming, based on all the headlines and all the news, and this is getting, and also people wanting to put their mark on the fact that this Labour government have been absolutely dog shit. I think we're going to get quite a high turnout on this one. And yeah, Labour are going to take an absolute beating.
Yes. I mean, on turnout, generally speaking, and these are very, very rough numbers, the turnout at a local election is usually about half that we would have at a general election if you look, over a long period of time. Of course, we'll see whether that changes. The general kind of expectation, I think, as you rightly alluded to, is that it's likely to be quite a good election day for Reform.
Yeah.
And certainly quite a good election day for the Green Party as well. Probably a pretty dire election day for Labour, and arguably a bit of an average one for the Conservatives and the Liberal Democrats, who have become, well, the Lib Dems certainly have become basically irrelevant in recent months. All that said, the actual results I don't think matter especially much. What matters a lot more for markets is going to be what happens in the aftermath of the results. To be very clear, again, in a difference for a general election, there is no exit poll. There is no, counting all through the night. There's actually no point staying up all night and watching it, to be honest with you, because the majority of these councils do not actually even start counting until this time tomorrow. So it's going to be Friday afternoon at the earliest before we have a clear picture of what's gone on.
I think you may get a couple very small boroughs and whatnot that kind of don't have many to count, and they might be a bit ahead of the curve that we might start seeing them trickle in overnight.
Yeah.
Purely because there is this thing, like there is in the US as well, some of these local regions and whatnot, or these local boroughs and that, they kind of take pride on being the first to report, and there's a bit of a race between some of them. So we might see some trickling through, but like you're right, it's going to be tomorrow is going to be the day when we start getting the big jumbotrons on, and hopefully that red is being poked out. But again, and in terms of what this means for markets, obviously all eyes on how Starmer takes the defeat.
Yes.
And it will be a bit of a absolute rogering. This be fair, but again, it's for us, for market participants, especially when looking at gilts and obviously sterling. It's going to be how the market reacts in terms of how it's pricing in the succession kind of playbook, and who's coming after
Yes.
them? Is it, again, anyone that doesn't know it, that's not UK based, you are forgiven for not knowing our internal political kind of makeup, because
We'd rather not know it, to be honest.
we struggle. But to give you a bit of a guide, the person that is likely to be keyed up to replace Rachel Reeves is a guy called Torsten Bell, or Torsten Bellend, and he basically gets an erection for taxation, tax for growth, and all of that. And he's an absolute mug. So that's why, if Reeves does get booted and he gets strongly mooted as the guy coming in to replace her, we could be in a spot of bother in the gilt markets. Would you agree on that?
Yes, I would agree with that. I would also say that, yeah, there are two things to watch really in terms of the aftermath, the immediate aftermath of the local elections. The first is, what does Starmer do? I think there's already talk in the media that we're going to get another big set piece speech to reset his agenda, which would be about the fifth time he's done that. So, clearly diminishing returns on that
Yeah.
front at this point, to say the least. So I wouldn't take, too much credence of those reports. There's also, the question of, is Starmer going to embark on a cabinet reshuffle? Does he look to, potentially bring in leadership challengers closer to the centre of power? Do you bring Angela Rayner back to cabinet, et cetera, et cetera, et cetera? So that's the first thing to keep an eye on. The second thing to keep an eye on is, what does the rest of the Labour Party do? And I don't mean just those names who are in the fray to potentially become leader, Angela Rayner, Wes Streeting, Ed Miliband, Andy Burnham maybe, but also just your run-of-the-mill backbench MPs.
Yeah.
Is there going to be a kind of groundswell of some opposition within the Labour Party of actually, run-of-the-mill backbench MPs going, I think, we've just had an absolute demolition at the ballot box. We've got 3 years, give or take, until the next general election. People are clearly not in favour of what we're doing. They don't think we're delivering on what we were elected to do. Now is the time to change our leader. So I think they're the two things to keep a very, very close eye on. Both of those, as in true UK political fashion, will become clearer in the papers over the weekend, because that's just when political news seems to break here in the UK. So that obviously presents a risk for sterling assets at the market reopen on Monday. I think the very, very simple equation is, the more perilous and fragile Keir Starmer's position looks at the top of the Labour Party, and by extension in number 10, the more of a downside risk and the more of a bearish factor that becomes for the pound, and also for gilts as well. Because the market has basically two things that it's going to have to contend with in that sort of a scenario. The first is uncertainty on the political front in terms of, who comes next? How long is it going to take to determine who comes next? What are the rules around a Labour leadership contest? All this kind of stuff. The second thing is certainty on the fiscal front, or relative certainty, that actually a new number 10, number 11 team, because if Starmer goes, Reeves is going too, they are likely to adopt a much more left-wing, if you can imagine we can get more left-wing, a much more left-wing fiscal approach. And as a result, they will probably tear up Rachel Reeves' fiscal rules. They will look to increase borrowing, increase spending, increase taxation, blah, blah, blah. So they are the two things for markets to focus on. I would argue that Friday, tomorrow, Friday, actually, fuck me, it's been a long week. Tomorrow is, and this could be a famous last words, but I wouldn't expect that much volatility in sterling assets tomorrow. I think it's more of a story for next week, as the fallout and the ramifications of the results start to become a lot clearer.
And if you are looking for those kind of like the tail events and whatnot, again, I'm not suggesting for a second that this is the probable outcome. But again, it's, as a trader, you should have everything on your radar. It's not a 0% chance that if the damage is so great and Keir realizes that he's out regardless, he may decide to do something a bit foolish and even call something like a general election. Now, I'm not saying that's going to happen, but it is something that, we should be pricing up, even if it's a tiny percent chance. Again, just a caveat, I do not think that's going to happen, but I think as a trader, it's prudent to try and mentally price in what would happen to to XYZ markets if XYZ was announced. I, for one, would definitely be kind of having something on my radar about what I would do in that situation. Again, I'm not saying it's going to happen, and it's very difficult when you kind of say these things out loud and people go, oh, well, Ryan thinks there's going to be a general election called. I don't for a second, but I'm also, I've been around long enough to know that you've got to mentally price these things up. If that were to happen, and again, I don't think it will, but if it did happen, what would your kind of, what do you think the instant market knee-jerk reactions would be?
Fuck me. Horrible. absolutely horrible. I mean,
Well, you say that, but if there was a snap election, if there was a GE called, Labour are gonna lose power.
yeah.
So, potentially, this could be good for, sterling assets.
Uh,
However however, what market could be pricing in is a hung parliament because have Reform got the numbers for a majority?
Yeah,
Probably not.
that's exactly what I was going to say.
And
If you,
yeah,
we've only got 3 minutes, so we haven't really got time to dig into this. But what I would say is, if you come out of a local election with the two best performing parties as Reform and the Greens,
they're not gonna marry in the middle.
they're not going to marry in the middle at all. And also, neither of those at this moment in time, as far as I can see, have a particularly credible fiscal plan.
No.
And I think markets are going to take a very, very dim view of that. But yeah, the other thing, just lastly on that, before we move on to the day ahead, is you're absolutely right. It's a very, slim probability outcome. It's also a slim probability outcome that Starmer might actually hang around and stay. This
Yeah.
could be a better night for
Yeah.
Labour than they expect. What I would say, just overall, is that similar to what we've seen in the Middle East, actually, on the geopolitical front, on the political front, once that can of worms is opened in terms of leadership challenges and rebels and all the rest of it,
Yeah.
it's very, very hard, one, to get the worms back into the can, but secondly, to predict exactly what's going to happen next. There can be quite a few unintended consequences that follow that. So, do be very
Exactly.
prepared for any outcome.
Exactly that. But you mentioned the day ahead. Go for it.
Yes, indeed. So, not actually too much going on, to be completely honest with you, which is just as well. 10 o'clock this morning, we have the latest retail sales print out of the Eurozone. This is March data, so somewhat stale. Sales seen falling by 0.3% in March compared to the 0.2 decline that we saw in April. The only other notable data point that we have today is the weekly jobless claims number out of the United States. Initial claims, they're seen at 205,000 in the week to the 2nd of May. That would be marginally up from the 189,000 we saw previously, but that prior print was the lowest level since 1969. So I don't think we can complain too much about that.
69.
Oh, God. Continuing claims, meanwhile, they're expected to hold broadly steady at 1.8 million, and neither of those data points pertains to the April non-farm payroll survey week, with that data being released tomorrow. Besides that, have the Fed speakers, including Williams, Hammack and Kashkari, and on the earnings front, we hear from McDonald's before the market open and CoreWeave after the market close, while participants will also, of course, continue to pay very close attention to anything that we get on the geopolitical front as well. Oh, bless
me.
you.
Thank you very
That
much.
was awful timing on my part.
That was phenomenal timing. I don't know what you're on about. But yeah, exactly everything that Michael said. Obviously, remember as well, we could get a response to Tehran's response to the US deal any day, any second. I did see a headline pass as we've actually been on air where the Iranians are apparently, according to Channel 12, which I believe is one of the Iranian TV channels.
Israeli.
Oh, is the Israeli one that the Iranians are prepared to give up 60-something% or something like that of their enriched uranium, but no country's been allocated it yet. But again, there's going to be lots of headlines, there's going to be lots of noise, which is why you should be using PIQ to gather all your news in one place.
Well,
but there you
indeed.
go. But yeah, Michael, thank you as always. Listeners, thank you so much as always. Yeah, roll on tomorrow for some fallout from today's election results in the UK. Whatever you're doing, keep it tight, stay safe, and we'll see you all tomorrow. Goodbye.
See you later.
See you later.